What a wild week it's been. Meta's shares actually dropped under $140 per share, which is crazy because none of us even thought that those shares would go under $150 per share. So that's how nuts this environment has been. And that's what I want to talk about in this video. But guys, first, let me run that intro. What's up, guys, and welcome back to the channel. Let's dive right into this one so you can see here that Meta's shares have now crashed to under $140 per share, which is nuts because just a couple of months ago, I guess maybe 12 months or so ago, the shares were trading as close to $400 per share as they've ever done. And so it's crazy that the share price has collapsed to where it has gone. And it's nuts because I actually previously made a video, which I will link to at the end of this video, where I did discuss that I would be more interested in purchasing Facebook if the shares went under $150 per share. And some of you guys did mention or make comments that it's a pipe dream that the shares would get under $150 per share. And my response was, you never know what could happen with the securities markets. There's a little bit of humility that's involved when it comes to valuations. Sometimes you have to sit tight and accept the fact that the shares might not come low enough for you to ever buy a position in the company, and that's okay. And so I actually went back to try and troll those guys who said that it's a pipe dream for the shares to ever come under $150 per share, but they actually preempted that and they deleted those comments. So you guys got lucky this time, but I'll get you next time. Now, the way that I want to do this video is in part one, I want to talk about why Meta is crashing and if it's cheap enough to buy right now. In part two, I'm going to talk about how I'm looking at investing in the company potentially, as well as a discussion of their stock options related opportunities. I know you guys like when I discuss cash secured puts and covered calls, and so I'll do both. And so let's dive into what's actually happening with the company share price. And largely, it's not a Facebook or Meta specific item that's happening. This is an economic issue. And the big item is that the Fed raised interest rates, but it's not the raising of the interest rates which is worrying investors. It's the fact that the Fed has become more hawkish. And I do believe that they're doing the right thing to contain inflation right now, but it's left a lot of investors wondering just how bad this can get. Now, there is another item that I do believe is a non-issue, but I have started to hear some people discuss it in the value investing community. And so I want to dispel those rumors right away. And what that issue is here's an old article from eMarketer, and they've effectively said that Facebook and Google's market share for the ad spend business in the digital space is expected to decline to a 48.7% market share in fiscal year 2023. So that's the first time that the market share is expected to go under 50%. But does that mean that Facebook's revenues are expected to decline with the loss in the market share? Well, that's not exactly what's happening at all. You can see in this article that the duopoly is being challenged with TikTok, Amazon, Walmart, Spotify, Roku, Snapchat, and other entrants. But what's largely happening is the market as a whole is growing, and most of that new growth is going to the new entrants. And so it's not that Meta and Google's revenues are declining because they're losing market share. They're not picking up a substantial amount of that new market share that's going to the new entrants. So is this a risk? Yes, it is a risk, but it's not dire at the moment. If all ships are rising, it's okay, but there is sort of a long-term risk mitigation strategy that Meta and Google do have to discuss internally, especially Meta. I do believe that with TikTok and other sort of social media platforms coming up, I guess TikTok largely is the one, they're going to actually start losing ad revs as they continue to lose eyeballs in that space. I think Google is more insulated because YouTube continues to grow. There's no real competition for them. And Google AdWords is an absolute consumer monopoly. But overall, I'm not worried about that situation in the near term. And with the long-term valuation, I am discounting Meta's valuation to take into account losing some market share to TikTok. Now, how exactly is Meta responding to those near-term economic headwinds? Well, they're doing it by protecting the bottom line through the reduction of headcount. Now, there's two ways to reduce headcount. One is you just slash. And I don't believe that in the tech space where you have 2% unemployment, that's the right strategy, especially if you have some groups that are starving for talent and other groups that have an excess amount of talent. So I like the fact that Meta is utilizing the 30-day list. In fact, they should increase that to 90 days to make sure that the people that are slashed, or at least key people that are slashed, find a new role in the company. And so you can see that Insider actually discussed that, where they said instead of terminating employees outright, Meta is giving some workers whose roles have been eliminated a month-long purgatory period to apply to different jobs within Meta. So I do believe that that's good. Now, the other boom that's coming this year that didn't happen in 2022 and it's not going to happen in 2023 is the fact that we have midterm elections. Well, there's going to be a lot of ad spending happening during the midterm elections. And so what is Meta doing to sort of protect themselves in that environment? Well, you can see that Mark Zuckerberg is actually getting ready to personally beat up any potential Russian bots that interfere with the midterm elections. And so you can see that the UFC is widely supporting him, with Conor McGregor saying that's amazing and Joe Rogan coming out and saying that the training looks solid as well. But of course, whenever you get the UFC's attention, you're obviously gonna get somebody who calls you out to a fight, and that's exactly what happened, because Patty, an up-and-coming superstar for the UFC, has actually called out Mark Zuckerberg and has stated that he wants to punch Mark Zuckerberg in the head for shutting down his Instagram account. So we'll see if that fight actually takes place. I'm hoping it does, and I've actually made a poster for Patty versus Zuck. I know a lot of people don't have their money behind Zuck, but I think the odds would be substantial for Mark Zuckerberg to pull this off, and so my money's on you, Zuck. Now, more importantly, I did discuss those cost-saving measures that Meta is putting forward, but notice, in the model that the Patreons have access to, I am not giving Meta any credit for cost reduction, so there could be some upside to the valuation. In fact, there'd be a substantial upside to the valuation. But I do believe that any of that upside will likely be more than offset with revenue declines, at least in 2022 and 2023. So you can notice that at the bottom there, that in 2021, they had costs as a percentage of revenue of approximately 60%. In 2022, they did come out in their conference call saying that it's going to be a higher cost business. And so I raised that to 73.3%. But with their cost cutting measures, that could come under. And so there is some upside, but I'm worried about what will happen to that total revenue line. I'm not growing it at all in fiscal year 2022, but it could potentially go backwards. We don't know. I don't think it goes backward, especially because of the political ad spend that you're going to get in Q3, but anything can happen. Now, before I go into the valuation, I do believe it's very important that you see the valuation on Meta. I do have to remind you guys that approximately 80% of the watch time on this channel is from people that are not subscribed. So guys, if you can, please consider subscribing to the channel. Now, let's dive right into the valuation. You can see that I'm valuing the company at approximately $230 per share. And compared to the current share price of $140 per share, the company's trading at approximately 60% of its intrinsic value. And the current share price reflects a 14 times EPS. And I would be super excited to own Meta at under $100 per share. And I know a lot of people will say that you might not be able to get Meta for under $100 per share, but the truth is I don't need to, because the options opportunities right now are quite exciting. And I'm going to show you exactly which option that I'm going to enter into hopefully on Monday. And I'm going to discuss that in the second part of this series. But the first thing that you guys got to be aware of is how do you get access to that model for Meta? Well, you can get access to that model and all the other models at the lower tier of the Patreons. And if you want to join us for an epic live call every month, you can join us at that upper tier. Now, when part 2 is available, it will be linked right here. I do encourage you guys to take a look at that video that I did put out on Meta previously, where I discussed the downturn and the cost-saving measures that they were putting in place, and you can see that video right here.